Welcome to this next episode of Q&A Thursday, where I will be answering your questions about business and property that's going to really help you start, scale and grow a property business and become financially free. So you may have seen me in last week's video arriving at Studio 6 in Whittam, where I was recording my book. I've just finished that recording. Here it is. Bricks, Mortar and Other People's Money. This will be available on Audible very, very soon. But look, if you've not yet got your copy, your hardback copy of this book, you need to click the link below right now and get your copy ordered and delivered to your door as quickly as possible. This book has literally helped thousands and thousands of people raise joint venture finance and do no money down deals in property. My name is Liam Ryan. I am the co-founder of Assets for Life and a best-selling author. And in this video, we're going to be talking about business and property, and I'm going to be answering your questions. Please make sure you like, comment and share this video, and remember, if I can build a property business, if I can become financially free through property, you can, regardless of who you are, where you're from or what your situation is. Okay, so let's get on with the questions, and here are some of the questions that have been sent in to me personally. Well done for sending these over. Some great questions here, so let's pick out a couple now. Question one is from a woman called Rebecca, and Rebecca is asked, how do you do a joint venture with an investor? Well, hey, you know what you need to do. You need to obviously go and get my book. But how do you do a joint venture with an investor? Well, there's many ways in which you can structure deals with investors. And I'm going to give you the two most common ways right now. Option one is you meet someone, a friend, a family member, someone at a networking event, a business colleague, someone you might meet on social media, or someone that you work with, and they've got some cash in the bank. And if you've got cash in the bank, it's a depreciating asset. It's going down in value every single year. And if it's going down in value, actually, it's a liability. So what you can do is you can say to Mr. or Mrs. Investor, you can say, hey, I've got some property deals. I'm looking to work with investors just like you. You lend me your money. So let's just call it, £10,000. I'm going to invest that into my property business. And at the end of the first year, I'm going to give you back 10,000 plus your interest. And let's just call it 10%. So you'll give them back £11,000. Now at that stage, they can reinvest, they could take out the profits and reinvest the initial investment capital. They might want to then top up the amount of money that they have with you. That's obviously a discussion for you to have with the investor at the end of their term. Please make sure that you use proper contracts. We have a solicitor drawn up loan agreement, and of course make sure that you know your client and you do anti-money laundering checks. So copies of IDs, passports and bank statements is what you would need to do. The second option when working with a joint venture partner is doing more of what we call a 50-50 JV. Now when you do a 50-50 JV, the structure of the deal with the investor is a little bit more complex. So when you do it how I'm about to explain it to you, you need to make sure that your investor is a sophisticated or high net worth investor. But this is typically what happens. You are a professional property investor and you've got some amazing deals. Those deals need funding. You've been out there, you've networked, you've found some investors and they want to give you the money. So rather than give them a fixed rate return, because that's not going to float everyone's boat, this investor, they want a piece of the pie. So you bring in the deal, you bring in the team, you bring in the expertise, you're going to go and do all of the work, and the investor puts in the money that's required. And what the investor then gets is a 50% share of any profits and future rental income. Plus, when you refinance the property, the investor will get most, if not all of the money back when you refinance. This is a great win-win for you and the investor. Why is it great for the investor? Where they're making money in property, they're owning property with you, or they're going to get 50% of the profit if you sell the asset. You've done all the work, and without both of you working together, you wouldn't have got the deal over the line. I absolutely love working with investors. Doing joint ventures has completely transformed my life, and by doing JVs, we've now added over £12.6 million worth of property to the portfolio, and I have personally raised over £5,000 in joint venture finance. My first ever joint venture partner was a guy called Dave from Basildon here in Essex, and he lent me £5,000. That £5,000 went towards my first ever property deal. My next investor, £250,000, and the rest is history. So let's move on to question 2, and this question is also from Rebecca. It's a really good question, and Rebecca has asked, how do you refinance property? Well, that's a great question, and let me explain this to you. You're going to want to grab a pen and paper, and before I get started, if you would like houses for free, please give me a big thumbs up and put yes in the comments box right now. Great, thanks for doing that. So how do you get houses for free? You need to follow the BRR model. You've got to buy, refurbish and refinance. So one of our core strategies is HMOs, house is in multiple occupancy, and we will go and buy a property using our own funds, but typically investor funds, and we'll convert that house from a 3-bedroom into a 6-bedroom multi-let. So when you look to add value, what you're doing is adding So what we typically look to do is buy a 3-bedroom house and convert that into a 5 or 6-bedroom multi-let. And what you do through this process is you are adding value. And at the end of the refurbishment, we get our 6 tenants into the house, and then I'll make a phone call to David, one of our brokers at Advocate Finance in Colchester. Please go and check him out. He's an absolutely brilliant guy. He's got a fantastic team, and he really provides amazing services when it comes to finding you the best mortgage deals in the market. So look, I'll give David a call. I'll say, David, we've got our 6 tenants in the house now. Can we go and get a refinance done? And what we do typically with our HMOs is we're looking for a commercial value. When you have something valued commercially, you are getting a value based on the rent roll rather than the bricks and mortar value. And typically the valuer will come round, and we, in almost all cases, we get the value that we have put on the paperwork. And once we get that new value, we will then go and get a 75% loan to value mortgage. And in many cases, that will pay back the initial investment capital that was used to acquire and also do the refurbishment. Now, you're not going to get all of your money out of all of your deals. And you have to be prepared that when you refinance, you will need to leave some money in. As long as we can get all money out within 3 years, then we are happy to proceed with that property deal. You might be thinking, how do you get all money out? Well, you use the rentable income. So I'll give you an example. Let's just say there's £12,000 left in the deal when you refinance, but that deal is paying you £1,000 a month net profit after all costs. Well, 12 months, you've got all your money out, infinite return, and you've got a free house. Right, let's have a look at what other questions we have here in today's Q&A episode. And another question here, when does the investor get their return? Well, that's a really good question. It depends on how you've structured the deal. So if you're doing a deal with the investor where they're getting a fixed rate return, then typically speaking, the investor will get their initial capital back plus their return at the end of the agreement. So if you've borrowed the money for 12 months, then of course it will be in 12 months' time. Now, something which I do with investors is we have a clause in the loan agreement that says if I can pay the investor back earlier, then of course I am allowed to do that, and we just pro rata the interest, but the investor can't call on the money before the agreed term. Because sometimes we have clients' funds for, say, 2 years, but we're in and out the project within 18 months. We don't want to be paying interest on money that we don't need to have in the bank account. If you're doing a 50-50 with a JV, where they put in the money, you do all the work, and you are sharing the profit, then when you sell that house or that development, the investor will get their initial investment capital back. Let's just call it 100,000. And if there's £100,000 profit, you will take 50 of that, and the investor will take their 50,000. And again, that's done when you sell the development. If you are working with an investor and you're following the buy, refurbish, refinance model, then once you refinance the property, the investor will get most, if not all, of the initial investment capital back, and then you own the asset together 50-50 in a limited company, typically speaking, and then you're going to share the rental income every single month, 50-50. So there's many ways in which you can work with investors. There's many ways in which you can all make money from the deal. It just depends on the deal. It depends on the investor. It depends how much they're investing. And again, just as a reminder, go and get my book, Bricks, Mortar and Other People's Money right now. Click the link below, get this to your door, and I'll see you at some point in the future. So I really hope you've enjoyed this video. Please help me by helping you. Let's get this YouTube channel up and running and building some momentum. Can you please, if you've not done so already, please like, comment and share this video. Please now tune into more videos by clicking a button somewhere on the screen right now. And remember, if I can build a property business, you can definitely do it. You've got to believe in yourself. You've got to take action. You have to get yourself educated. And if you want to get educated, which I hope you do, then please make sure you come and join me at one of my up and coming property events, where I will welcome you with open arms, and I will show you and give you everything you need to live the life of your dreams.